In the energy quadrant today, crude did a big midday reversal. Crude was actually higher by 1% on the highs, having settled at 57.23 and getting all the way up to 57.85 before it spun around and dropped all the way down to 56.20 for an over 2.5% move, down 1.79% on the lows. Again, that comes from it being up 1%. It was up all morning and then collapsed on the EIA report. We had a larger than expected build. S&P Global Platts estimated that the EIA crude inventories would increase by about 2.7 million barrels. That was a survey of about 11 crude oil analysts. Crude came out with an increase of 7.9, or a build of 7.9 million barrels, excluding crude oil in the Strategic Petroleum Reserve. This is the main reason that crude oil spun around and went back down in the 56 handle, came back up a little bit off those lows, but still fighting toward the bottom of that channel. That's what crude is doing now. It's been essentially existing in the same channel for most of the year and rallying back up and then falling from about the middle of that channel down. Gasoline had a draw of 2.8 million barrels, but it didn't really show any sort of a bid off of that draw, simply because refinery utilization, which a lot of people don't look at and should, especially at times like this, refinery utilization fell again. Now that's a bad thing because refinery turnaround is winding down. Turnaround being the time where they shut down sections of the refinery for maintenance in order to retool to produce winter blend gasoline. Now we're coming to the end of that. Normal cycles, you get to about the middle or the end of November and you start to see refinery utilization come up from those drawdown lows, which tends to typically be in that 85-86% range, and start to ramp back up towards 90, which, since there's been no new refinery builds, that's still about the norm for refinery utilization, but we dropped this week. So we dropped to about 86.1 from a little bit over 86.3, and that's a little bit of a negative sign in terms of short-term demand. OPEC's still not talking about, when you include Russia in the conversation, not talking about excess production cuts. They're just going to continue the cuts that they're already in, at least at this point. So right now, crude oil feeling the pressure of lower demand and a steady supply.